Welcome again to everyone. This is the Buying Your Own Home webinar. And tonight we will be sharing a lot of information with you. My name is Kimo. I'm from Expat Housing Network. We are a company of internationals helping other internationals find a home to rent and to buy. I'm the founder and I'm a buying consultant. And this is the buying team, by the way, that you see here on the screen. We've got people from all over the place, from the Netherlands, Brazil, Ireland, UK, and we're happy to support you in the process. And I'm co-hosting today with Cesar.
Thanks. My name is Cesar. I'm a financial specialist and I'm the founder of Mr. Mortgage. We're a mortgage brokerage and advisory firm. We've been helping our clients since 2017, since the start of 2017, with their mortgage applications and their mortgage advisory and anything that comes along. We have news though, because we have a new colleague, but I forgot to send a picture to you, but I will do it for the next presentation.
Good, congratulations.
Thanks.
Perfect. And today's goal is to add value to you guys. We believe in sharing information freely, so we're going to go over a few things. First, we're going to share a little bit more information about the current market and some news. We're going to share a few reasons why you should buy or why you should rent. We're going to introduce you to the process of buying a home. We'll share a little bit more about the cost of buying a home as well. We'll help you understand the key players in the process. And in the end, there'll be plenty of time for Q&As. Most of the time, the actual presentation takes about 30 to 35, maybe 40 minutes. And then from experience, the Q&A takes about an hour, hour and a half, because there's a lot of questions. But that's what we want to do. We want to make sure that we actually can add value to you guys, and everyone might have a different situation, might be in a different phase of the process, or might have a different background. So please do fire away. Use the chat, or sorry, the Q&A to actually ask your question, and we'll pick them all up. We'll try to pick them all up. What might be good for you to know as well is that the presentation will be shared as well as the video of this webinar. So no need to write everything down. To start, we'll talk a little bit about the market, because there's a lot of news about, okay, what does the housing market do in a COVID crisis? It's very difficult to say. So far, we haven't seen any negative effects on the housing market. If any, we see that the focus on houses has increased because people are stuck in their homes more, so they want to make it as pleasant as possible. That is, of course, to say that's the way it is now. Who knows where it might be in the next year or 2 years, but so far so good. And even next year, ABN AMRO, one of the biggest banks in the Netherlands, doesn't see a fall in prices. So what we can tell you is that when you think about like effects on a market, think about several different things. First of all, think about the different regions, right? Amsterdam is not compared to a more rural area. The Netherlands is not compared to maybe Spain, and so on and so on. Also have a look at supply and demand. What we see is that Amsterdam is still a very attractive city to live in, because the cost of living is still quite okay, and the actual how do you say that? The accessibility is still pretty good as well. Take, for example, London, or take some of the other metropolitan areas in the world. Just commuting between work and home, it can take up an hour and a half. And even though now a lot of people are working from home, who knows what it'll be in the future. And I'm a little bit biased because I live in Amsterdam. Of course, it's a lovely city to live in, but also knowing that I've lived in this city for the last 12 years. And from the first day I came here to up until now, there's been a housing shortage. It's always been a challenge of finding a home, whether it's to rent or to buy. Of course, if you have a very good budget, then it makes it a little bit easier. But what we see is that Amsterdam is not building houses fast enough. And the same thing applies for some of the other cities in the Netherlands. The other thing, what we would always recommend is don't buy for a short term. Don't buy for 1 or 2 years. Cesar will also tell you a little bit more why not. But it's a long-term investment. And we know that you guys might leave the country in 5 or 10 years, or might move back home. Who knows? But yeah, 5 years is a decent term. 1 to 3 years is a little bit short. So the effects of what's happening at the moment could maybe show in a year or 2 years. But if you buy for a little bit of a longer period, then most likely you will have weathered any of the storms that will come. Perfect. Then some latest news. One thing that might be useful for some of you who are looking to buy up to 325,000 euros next year, you can actually access the National Mortgage Guarantee. What does that mean? Well, technically it means that the National Mortgage Guarantee will cover any of the losses that you will incur in case you would have to either sell the home or couldn't pay your mortgage anymore because of several factors. Maybe you lose your job, you go through a divorce, you get sick, and they'll cover if you buy an apartment that is no more expensive than 325,000 euros. If you purchase it for 325, it's valued at 400. Great job. It still counts for NHG. If you purchase it for 340 and it's actually worth 325, sorry, you won't be able to actually apply for this mortgage guarantee. So that's good for you guys to know. Cesar, maybe you can talk a little bit more about the transfer tax. You guys created a really nice infographic, so take it away.
Yeah, so first-time home buyers in Netherlands have a bit of an issue of finding an affordable home. That's also why, for example, the NHG cover goes up from 310 to 325. So the government is trying to make it accessible for first-time home buyers to buy their home. One of the current plans that they have, so during budget day, which takes place in September, the government presents the budget for the next year and also their plans for the next year, so 2021. One of the biggest topics that they mentioned was to make it easier for first-time home buyers to buy their home. They are going to cancel paying the property transfer tax. What is the property transfer tax? Every time you buy real estate, you need to pay 2% of the purchase price as tax. In some countries, it's called stamp duty, so that could be recognized as well. What the rule is, if you are younger than 35, so 34 or younger, then you don't have to pay the property transfer tax of 2%, which will save you a lot of money for the initial investment when you buy a new home.
Perfect. Thank you. And moving on, renting versus buying. Cesar.
Yeah. So when we have an initial chat and people come to us that they want to buy a home, we always ask them what made them look into buying a home. We usually get a lot of questions about, or we get a lot of answers about that renting is too expensive, and you'd rather the client would like to spend their money on buying a home. However, there are still some benefits to renting. So why you should rent a home? Renting a home gives you flexibility. You don't have to pay any taxes. You don't have to be worried about any maintenance, because that will be taken care of by the owner. And what else? You don't have a down payment that is required to live in the property. So the cons of owning a home are you need to pay taxes, you need to take care of maintenance, and it's more difficult to move, because if you buy a home before you could move, you need to sell it, and who knows, in the current market, usually it doesn't take that long to sell it, but you could be in a situation where it's a bit more difficult to move. If you're still interested in buying a home, why you should buy a home, so it gives you stability, because you don't need to renew your tenancy agreement. In your monthly payments, you'll build up equity, because you're repaying the debt that you have. And if you consider, because we don't know what the value will be in the future, But if you consider that you sell the property for exactly the same number as you bought it for, then it means that with the monthly payments, you're building up equity. On the interest that you pay, there is a tax benefit, so there's a mortgage interest deduction. Cons of renting a home: rents will keep rising. There are no tax benefits as you do have with owning and buying a home, and you're not creating any wealth through your home. Another approach to renting versus buying. So what a lot of people do is they look at, okay, I'm paying rent. That means I'm burning away money, because that's money you'll not see back, the rent that you paid. So what we did, we compared similar properties. On the left side, you see a property, Gerard Douwstraat, 80 square meters, rent 2,250 per month. On the right side, similar property, slightly bigger, Gerard Douwstraat, 88 square meters. Let's say you buy the property for 525, because that was the asking price. I don't know what the actual purchase price will be, but let's consider 525, and an interest rate of 1.58. Your monthly payments will be a bit over 1,800. So you're already paying less than when you would rent. However, so you're going to compare paying rent, so burning away the money that you pay for rent, and compare it with the interest that you're paying. So you're going to pay 1,800, and within that 1,800, 691 goes towards paying interest. So there's a huge difference when you consider what you're burning away. Of course, when you buy a home, you have the initial investment, so the closing fees. For this property, it would be 23K. So then you look at, okay, so you're going to have this investment of 23K. How much time will it take you to get your return on that investment? And that will be, in this example, after 15 months. What else is good to know? Let's say, so you have this mortgage of 525K. You're paying interest. After 5 years, you decide to move out, to sell the property. So remaining debt, remaining principal is 453. Let's pretend as if you're selling it for exactly the same number. Then the cash at hand would be a bit over 70K. So that's the equity that you're gaining.
So that makes sense to actually purchase a home. Of course, depending on what you're looking for. And by the way, for those of you who joined us a little bit later, the webinar will be recorded and shared, as well as the presentation via email. If you have any questions, pop them in the Q&A. We'll try and answer all of them at the end of the presentation. So please feel free to ask and fire away. Now or then, both are fine. So if you've made the decision to actually purchase a home, some of you might have already made decisions. Some of you might just be interested in what it means and what the process is like, and if there are benefits. First of all, you need to know that you have to bring some money in savings. And Cesar already mentioned that the transfer tax or the stamp duty doesn't apply if you're younger than 35 and you're buying your first home. But it does apply if you have already bought a home before in the Netherlands, or if you're 35 years or older. Please mind that you'd have to bring 2% of the purchase price, which is due, of course, upon the transfer. What we've showed here is that there's the different types of costs, what the value is, and if they're tax deductible. Some of these costs are tax deductible, meaning that at the end of the year, when you file for your taxes, you can deduct these values from your taxable income. The notary is split into two. They create the mortgage deed and the transfer deed. Of course, depending on where you purchase a home, You have notaries that are in more rural areas that are a little bit cheaper, in the more major cities that are a little bit more expensive, but this is what you can expect to pay. Please note the mortgage deed is tax deductible. The transfer deed, which officially makes you the owner of the property, is not tax deductible. The bank or the mortgage brokers, they also charge you money, and what's good to know is that they're actually tax deductible. A typical real estate agent is 1 to 2% of the purchase price. Unfortunately, not tax deductible. I put in brackets there, the EHN charges a fixed fee. We don't believe in percentage commissions. The appraiser charges 550 to 600 euros. That is tax deductible. Technical inspector 425, interpreter 250 euros, bank guarantee 250 euros or 1% of the guaranteed amount. And then you have a price for actually getting or acquiring the National Mortgage Guarantee, NHG, which is 0.7% of the mortgage amount. And that is tax deductible. Now, we went over a list of things that are linked to the actual closing fees or the purchase cost that we just went over. And now we're actually going to go over a little more detail of who you'll meet. Well, first, notary. Why we put him first? You won't meet him the first time, but he's probably the most important in terms of the legal matters. So what he'll do is he'll create binding agreements. So that's the purchase contract. If you buy in Amsterdam, he'll create the purchase contract. Outside of Amsterdam, the selling agent will create the purchase contract. If you buy outside of Amsterdam, then the mortgage deed and deed of transfer will be made by the notary, and that's the moment where you actually get in touch with him. In Amsterdam, he'll also create the purchase contract. He'll come into play once the offer is accepted, so not before that. So once your offer is accepted, you can actually go on the hunt for a notary or have somebody that's supporting you select a notary for you. Then you have the appraiser. What does she do? She actually goes into the property, comes out and will define what the market value is of the property. Why is this important? Because the bank will only give you an amount of 100% of the actual market value of the property in the mortgage. So this has to be done by an independent party. What she does, she creates a report. Most of the work is actually done in the office. What she does, she creates a report and then has to send it to an independent institute called the NWWI. They review it, make sure that she played by the rules, and then after that, they'll send it back and say, hey, good job, this is solid, and you can actually share it with your client and with the bank. All in all, that takes 3 to 7 days. So this person actually comes into action as well once your offer is accepted. So they don't actually do any pre-work, so it's not like you can say, okay, hey, I'm thinking of this property, what is the value of it? No, they'll actually come into play when your offer is accepted. What we always suggest is that you actually get this person in before you sign the purchase contract, because it's good to know, because if you submit an offer and you've overbid by quite a lot and turns out that the market value is a little bit lower than you expected, then you might have to put up more cash. And it's always good to be aware of that before you move forward. Then you have the building inspector. They also come in after the purchase contract is signed. What they'll do, a visual inspection. They'll bring some tools to measure the humidity in the walls, especially in the bathroom. They'll sometimes bring a tool that shows how even the floor is. They bring a lot of other things and check, for example, the crawling space, how tidy the walls are, stuff like that. So they'll give you a report after they've done the inspection. Again, it's a visual inspection, so they won't break open any walls, or sometimes they might climb on the roof, but most of the times they'll just look at it from afar. And these guys are ex-contractors or constructors, so they know what to look out for. They've probably done tons of building inspections, so they'll know what to look out for. Again, get this person in before you sign the purchase contract. Why? Because you want to make sure that you know what you're buying, right? And of course, the agent will help you with pointing out some of the errors or defaults in the property, but these guys are the experts. And what you would like is to have a report that says, okay, hey, this is what needs to be done in the next year or 5 years or 10 years. This is how much it's going to cost you. It's a rough estimate what they'll give you. So you can either still negotiate a little bit or pull out if you feel insecure because, hey, it turned out that it's a skeleton in disguise. Then you have the mortgage advisor, Robin or Cesar, or the new colleague. What I always like to do is I always like to compare a bank to kind of like a retail shop. So you go in there and they'll try and sell you the clothes or the shoes or name it that are in there. And what I like to call the mortgage brokers or the mortgage advisor, in this case, Mr. Mortgage, more of a personal shopper / stylist. What they'll do is they'll make sure that something that you buy fits you. It doesn't really matter where you buy it, but you're aware of what you're buying and you're happy with it. In this case, it relates to interest rates. It relates to all criteria that are linked to mortgages. These guys have access to, what is it, 25 plus mortgage providers with a range of products, whereas a bank will probably give you one or two products that they sell. It's nice, right? It's nice to go with a bank, but honestly, the actual added value of having all your finances in the same place is overrated, I believe. To give you my honest opinion, I have a mortgage somewhere else and I don't really pay attention to it. It's not necessary. So I don't really care that it's not where my actual finances are. What also might be good to know is that the mortgage guys will actually make sure that your story matches and that it actually becomes a winning story. So you actually get your mortgage approved. And there's no such thing as pre-approvals from banks, but and these guys will actually be able to help you out and tell you, yes, it's very, very, very likely that you'll be able to get a mortgage, which sometimes actually gives you the edge when you submit an offer. Then you have the buying consultants. This is Alana, my colleague. What she'll do is she'll assist you during the process. She'll make sure that you're connected to all the right third parties. What the most important thing is that she does is making sure that you know what you're buying for and you're not spending too much. Knowing what you're buying for starts with, of course, asking the right questions at the viewing, making sure that all the documents that are linked to the property are researched and are properly evaluated, and then doing price research. So what are the properties that are in the neighborhood that were sold in the last 6 to 12 months? And based on that, you'll actually be able to calculate the market value. To give you an example, what you see on Funda is most often not what the actual value of the property is. Most of the times they post it for a little bit below to get more people in, and then it will sell for more. And this is where Alana can definitely help. She also scheduled the appointments, the notary, the appraiser, technical inspector. She'll stay in touch with the guys from Mr. Mortgage. And again, she'll review all the Dutch and the legal documents together with you, so you know what you're signing up for. Then the timeline, by the way, I feel like I'm rushing through this. I might speak a little bit fast, but again, this is recorded. It's going to be sent to you guys. So, and if you want something clarified, please pop it in the Q&A. We're happy to answer it. The timeline of the actual process, I would say the most optimistic is 3 months, and then the average is 6 to 9 months. Take into account that you'll start to search, and this is a little bit skewed, this part. So from the moment you start to search to the moment your offer is accepted, can take weeks, can take months, depends on what's on the market, how urgent it is for you and what you like. And actually, if you get an offer accepted, most people don't get their first offer accepted. Sometimes it's the second offer. So take that into account. Don't be disheartened if your first offer is not accepted. That's the way the market sometimes works. It's relatively competitive still. Then your offer is accepted. Congratulations, well done. Then you do your due diligence. So you get the appraiser in, you get the technical inspector in, and then they sign, or you and the seller sign the purchase contract, which happens after you've done your due diligence. Then, by the way, before you sign the purchase contract, or even before you start, I would advise you to have a chat with your mortgage advisor. Why? Because they'll be able to give you a little bit more information about the budget and request all documents. So once your offer is accepted and the purchase contract is signed, things move smoothly. But okay, going back to the purchase contract signing, this is great. Now the seller is locked in. You technically have 3 business days to pull out if you're getting cold feet or if you have doubts. The mortgage application will start when the mortgage guys have all the information. So the purchase contract, the appraisal report, your personal information, and some more. When the cool-off period ends, you're technically locked in as well. And then you have a certain period of time to actually get the mortgage approved. I've put here average 4 weeks. I know Mr. Mortgage can do it faster. No pressure, guys. But this is what you'll get if you work with the other parties. And then after the mortgage is approved, that's great. The statement of completion is kind of like the final invoices. Will have a list of all the things that you would still need to pay, mainly the closing fees and some taxes and stuff. Most of the time, you'll get that about 7 to 10 days before the transfer takes place. The transfer takes place, which is great. You'll sign the transfer deed, which makes you the owner of the property. You'll get the keys. You'll do an inspection first, though. So you go to the property to make sure it's in the same condition as when you last saw it in. Sometimes when people move a piano, things break, or suddenly this gaping hole appears in the wall that the piano was in front of. So make sure that the property is in good condition, and then you'll get the keys at the notary, and then you have about 2 months thereafter to hold the sellers liable for anything that they should have disclosed before transfer, right? Give you an example. We had a case where a power socket wasn't working. That was fine. Normally, maybe you install it or attach it again, but it turned out that They had to open the wall to rewire part of it, and it cost them about 1,500 euros. That was within the first week, actually, when they moved in. And then we said, sorry, but this should have been disclosed. The seller lived in the property for years, so they should have been aware of this. And then we held them liable, and they paid for it. So 2 months is that. The longer you wait, the more difficult it becomes to prove that it was already the case when you got the property. So don't wait until the last week to notify the seller about this. Cool. That was the presentation. I think we have a record.
Yeah.
26 minutes. It's not the purpose of this. The purpose is to actually give value to you. So now I think it's time for the Q&A. Let's see if I can pop open a Q&A. I always have.
I can also do it if you.
Yeah, maybe if you open the Q&A, I'll
Sure.
open the chat because I think I have to close the presentation too.
There are 5 questions in the Q&A, and all questions are mortgage related. Let me see. Let's start with. So one of the questions is. Some attendees put a question in the chat. I'll start with a question for you, Kimo.
Yeah.
One of our attendees, Linda OTS, is asking, how do we know that a home is in the same condition as when the inspector did her inspection? What if a roof begins to leak or a stove stopped working? Can we have a second inspection done? How does that work?
Good question, Linda. So you have the initial inspection done, and then it's a visual inspection. The inspector will test a lot of things. And you can, of course, request for a second inspection to be done or run a thorough inspection yourself on the final day. Of course, you'd have to pay for that. The inspectors are happy to come by another time, but you'll have to pay for that. If you do the inspection yourself, you don't get a second opinion from someone on the date of transfer, and you find out about anything not working in the first week or 2 weeks that should have been working, then you can hold the seller liable again. What might be good to know is that sometimes it's just bad luck, right? Like we had a case where there wasn't a leakage and suddenly something happened because there was a storm and the roof started leaking a little bit. Of course, you have the option to hold the seller liable, but you also have to prove a little bit that this was already the case. A final inspection can be done with a technical inspector if you want. Again, you'd have to pay for it, so that is up to you.
I'll so Katie is asking, but if you are under 35, then the break even is much shorter as you don't need to pay the transfer tax 2%. And I think that's referring to the slide with the renting versus buying. Yeah, if you don't need to pay the transfer tax, that would be sooner. We can set up these calculations for every property, but usually you'd compare what you're currently paying on rent and what the mortgage payments are going to be. So I hope this answers the question. Another question for you, Kimo.
Yeah, go for it.
How does the home that you're buying, this is a question from Linda again, how does the home that you're buying get maximal appraisal value? What if the appraisal is 15K lower than the purchase price?
So what if the actual valued property or valued price is lower than the purchase price? Okay. Then technically the bank will only give you the actual value of that property, right? So let's make a really simple example. You're buying something for 400,000 euros and it turns out that it's actually worth 350. Then the bank can say, we're only going to give you 350 if you haven't put anything in your offer that states that you can pull out. If the bank doesn't give you the full mortgage amount, then technically you're locked in. You'd have to pay the 50,000 cash yourself. That's why it's super important to actually do research prior to submitting an offer. Make sure you actually know what the market value is or what the range of the market value is, and submit an offer. Don't go crazy and overbidding because you've heard the market is going crazy. Really try and base your offer on what the market value is. And of course, link it also a little bit to the condition of the property, right? If properties in the neighborhood have sold for a certain amount, but your property was just renovated, then that has an effect on the value. Or if it's actually a shithole that you're looking to fix up, right? Then that might also have an effect on the value of the property. But always look at that, use that as a reference to place your bid, and then you won't be surprised too much. It might sometimes mean that the value is a couple of €1,000 below or a couple of €1,000 above, but then it won't surprise you with suddenly being 50K below the offer that you put in.
There was another additional question to that. How do you find a buying consultant?
You found one. So technically you can just look on our website or just Google it, Google buying consultant, but technically look on our website and reach out. We're happy to get in touch with you guys, and we have tons of experience of actually helping people. We have different packages as well, but I'm not going to go into sales mode. So have a look at that, and otherwise just Google it. There's plenty of agents out there, not all very internationally friendly though.
Perfect, thanks.
Shall I ask some questions to you? I just popped up on the screen and I managed to
perfect.
Get the Q&A up. Okay. Let's see. Okay, any specific rules or benefits? Yeah, any specific rules or benefits for people with the 30% tax ruling we should be aware of?
Who's asking that?
From Barbara Casara. Good one.
So when the 30% ruling had a duration of 8 years, before that it even had 10, and even before that it was 12. So you could make use of the 30% facility for 12 years. But back then you could increase the mortgage amount. So that would be the benefit, considering that it's only 5 years now, and if you've already been in the Netherlands for 1 or 2 years, then it means that you could get an increase of your mortgage for 3 years, because that would be the remainder of the duration of the 30% facility. And then what we noticed is it usually helps to get an extra mortgage of, let's say, 10K. So the impact is not that much as it used to be. What it does help you in a way, because if you're a non-EU citizen and you have the 30% ruling, then it means that you're here as a highly skilled migrant, and that can open some doors with a couple of banks. So that would be the biggest, or that would be the main benefit. Yeah.
Cool. Then Samira Safari is asking, is the applicant who applies a loan for a mortgage loan required to have a permanent job contract?
No, you could. You can apply for a mortgage if you don't have a permanent or indefinite contract. There are a couple of things to consider then. So your employer needs to fill out an employer statement. And your employer also needs to, so one of the check boxes is, are you intending, so this is a question to the employer, are you intending on giving the employee a fixed contract or an indefinite contract? And if the employer's checks that box, then it's considered as if you already have an indefinite contract. So that's one option. Another option would be that we could look into the average income of the last 3 years, even if it wasn't in the Netherlands. And another option could be that this is what we notice with academics. those could have a special ruling, and an exception could be made for this specific group. So doors can open.
Okay, thank you. I hope that answers your question, Samira. I think there are a few questions related to being able to rent out a property once you've bought it. Maybe, Serge, you could share a little bit more about the implications of buying something and then either having to leave the country or wanting to leave the country. What do you do with your property and your mortgage then?
Yeah. So there are a couple of scenarios. One of them is you work for a big corporate in the Dutch headquarters, but your employer is, because you have a specific skill, your employer is sending you to I don't know, the Paris office for a project of 2 years. In that scenario, the bank will allow you to rent out the property for 2 years. However, what you will see, so you're going to visit the notary, you're going to sign a mortgage deed at the notary, so that's a deed between you and the bank. And in that deed, you will see that you're not allowed to rent out your home without the approval of the bank, because you're getting a residential mortgage and not a buy-to-let mortgage. That's a separate product. Let's say after 5 years you want to leave the country, but you want to keep the property to rent out, then it means that you need to pay back the bank the money that you owe them, so the residential mortgage. And the way you could do that is by applying for a buy-to-let mortgage so that the bank can be paid off. I hope that answers the question. What's important to know then is you need to pay down at least 30% of the value of the property as a rule of thumb, and you need to have sufficient rental income to pay for the mortgage.
Perfect. A question that I would like to answer from Diana: can we buy a property or loan, or is it advised to contract with an agency? What I always like to say is that it's not rocket science buying a property, but there are certain things that are risky. So reviewing some of the legal documents or defining what the quality of a property is. And again, what we earlier talked about, you can overbid by a lot, but if it turns out that you don't have the right things in place in the offer or in the contract, you could be locked into a deal that you might not want to be locked into. Again, there's plenty of people who buy a property by themselves, and it can't hurt. But yeah, getting somebody on board that can actually support you and maybe get you either a better deal or a good value for money could definitely pay off. I hope that answers your question a little bit, Diana.
Can I add a bit to that?
Yeah.
As a financial specialist or as a mortgage advisor, I noticed that the entire process is more smooth when the buyer is working with a real estate agent. So I always advise to use an agent, because it takes away a lot of stress. It makes a lot clear on the purchase side. So from my perspective, I always advise to use an agent. Yeah.
That's very nice, Cesar. By the way, I did not ask him to say anything like that, so that's good. And maybe one more thing to add there is that selling agents, in my experience, are keen on parties that are serious. And what we've experienced is that it's also kind of like a specific world, right? The world of selling agents. There are definitely some stigmas there, and some typecasts, but technically what we've experienced is that when there's an equal offer, the offer is the same, and one is with a agent and one is without an agent, because the seller or the buyers purchasing by themselves, then what we see is that they're more leaning towards giving it to the party that has an agent. Why? Because they've done their due diligence and they're more secure that the buyer will actually move forward with the process. So
Yeah.
we see that. Yeah, that's from my experience. Just to add that.
Yeah.
So can you confirm that first home buyers under the age of 35 do not have to pay the transfer tax? And then he is very specific. If you buy the house on your 35th birthday, do you have to pay the transfer tax? This is KT Hans.
That's a funny question. So what's good to know, that bill still needs to be approved. So I cannot confirm it for 100%. However, when the government presented the budget plans, so before the government does that, the king gives a speech, and even the king included this specific topic in his speech. So there's a lot of pressure to get it approved. So the handover date is the most important. So let's say your birthday is on the 2nd of February, and and you become 35, but the handover date of the property is on the 1st of February, so one day before, then you don't have to be worried about anything, and you don't have to pay the property transfer tax. But as soon as you turn 35, then it's game over, and you need to pay 2% property transfer tax.
Thank you. I hope that answers your question. Mortgages can actually be 100% of the value of the property, as anonymous attendee. So only the money from savings would be for the administrative fees and the taxes. Yeah.
Correct.
Yeah, correct. So you can get up to 100% of the value of the property. So all the purchase costs or closing fees would have to be paid out of pocket. Then a question from Spiros. Are there any areas in Amsterdam that prices are expected to rise in the future and that will make it a good investment financially? Oh, Spiros, if I would know that, I would tell everyone or no one. Maybe that's that's the key. But of course, it's looking into a glass ball, right? Who knows? Prices are still going up. But if you would ask me what the areas are where it's more likely that they would go up, or where there's still some nice kind of like good value for money houses, then I would say either the east of Amsterdam or the north of Amsterdam, because well, the north of Amsterdam just had a metro line installed a couple of years ago, and we're seeing a lot of project developments happening on the other side of the I River. The east of the Amsterdam, well, Cesar bought there, and he can tell you firsthand that there's still some good properties to purchase there. I don't know why that is underrated, that area, but yeah, it somehow still is for some properties. So that's those would be the two areas I would look for. And yeah, outside of Amsterdam, I have less knowledge on a neighborhood basis. But there are definitely some cities that are doing well. I know that Groningen is doing great at the moment, though maybe most of you don't want to live there. It's too far north. But also looking at some of the attractive cities, Eindhoven, Rotterdam is doing great at the moment. So you could definitely consider those cities as well. A question from Dennis for you, Cesar. Can pensioners, retirees get a mortgage in NL with no employment income, only pension and savings?
I'll tell it, or I'll give the answer in a more broad way. So what the bank looks at when applying for a mortgage, the bank looks at what your income is. Income is a broad term. If your income comes from your pension fund, then that can definitely be considered. Maybe funny story to tell is when I was so before I started Mr. Mortgage, I used to work for ABN AMRO Bank, and when I was a junior, there was a lady that I helped. She was 94. She wanted to have a mortgage. And she got a mortgage for 30 years because of me. I hope she's still safe and healthy. But yeah, you can get a mortgage if you with your retirement income, definitely. Yeah.
Okay, thank you. Can we have an idea of the mortgage amount in regards of income and duration of the mortgage? I heard 30-year possible from Diane.
Yeah.
I think the question is, can you get a mortgage for 30 years?
Yeah.
And
you can.
Then the previous question, can we have an idea of the mortgage amount in regards of the income and duration of the mortgage? I think maybe, Diane, if you could be a little more specific there, that would be great. I think we would be able to answer your question a little bit better. So please just pop it in the Q&A or in the chat.
What's good to know, and this is for everybody, if you want a calculation of what is possible, we can do this for you. It's free of charge and no strings attached. So yeah, if maybe that answers Diana's question as well. So you'd have an idea of what the possibilities are, and you'll get an overview from us, and you'll see what your mortgage can look like for the next 30 years.
And then Javier is asking, do you foresee taxes or interest to rise in 2021?
Sorry, taxes?
Yeah, taxes or interest. I think this is linked to, so the interest is linked to the mortgage, taxes is linked to the bridge costs.
The taxes are already presented, so we know what's going to happen over there. Taxes are lowered. So that's, I hope that answers that question. Interest rates, it's difficult to tell. As Kimo cannot predict which neighborhoods will do well and where to buy a property. It's difficult for us to tell what interest rates will do. So today was election day in the US. That could have an impact. We're in the middle of a lockdown. Brexit is coming up. So there's a lot going on. You have new elections coming up in March in the Netherlands. So all of that could have an impact on interest rates. And it also depends on how quick we can get a vaccine. So there's a lot going on, and it's difficult to predict. Overall, I expect so that this is more of a trend that interest rates will decrease, and that's because that's what happened in the last 20 years, and with the current measures from the European Central Bank. Because of COVID, I don't expect interest rates to increase. And even if it would only be a small increase.
Thank you. I hope that answers your question. There's two questions about the technical inspection. One is whether it's legally required. It's not. The appraiser is necessary to get your mortgage, but the technical inspection is not legally required. I think sometimes, I'm just looking at Cesar here, sometimes if the property is in a really bad condition or the building is in a really bad condition, a maintenance plan is required, especially if the association of owners is not saving enough money, but the actual technical inspection of the property itself is not something that is mandatory. And then Rob is asking if there's if it's common to have like inspection contingencies in the purchase contract, meaning that if it turns out that the technical inspection shows certain defaults or errors or things about the property that need to be fixed, then you can sometimes pull out or renegotiate. What we see is we see two things. Either it says that if the buyer is not happy with the technical inspection, they can pull out. That is part of the purchase contract. Or sometimes we see that if the technical inspection comes back with things that need to be fixed above a certain amount, and what we see a lot is that they use kind of like 5K as an amount, then you can pull out if it's more than that. If it's less than that, then it's not something you can use to pull out. That's why we would always advise get the technical inspector in before you actually purchase or sign the purchase contract, because then either you have some room still to negotiate based on the results of that technical inspection, or you don't have to worry about the actual amount that it costs to fix these things, because it's not linked to that purchase contract. I hope that answers your question, Rob. And then it was also the question of, I think you already deleted it, Cesar. So then Rob is also asking, will banks accept non-Netherlands income to support the ability to make a payment?
Yes, but it depends a bit on what type of income that is. What we see a lot is that people already have a rental property, or they are already renting out a property that they own. That could be something to consider, but then again, it's also how much income is it generating, and is that really needed to apply for a mortgage over here? Yeah. So as mentioned before, income is a broad term, and that's a bit of a gray area. So it depends on how we sell and set up and sell your case to the bank. I hope that answers the question.
I hope so too. Then a question from Daniela Tesi. What happens if you buy a house because you think you'll stay in the Netherlands for a long time, but in 3 years you have to move to? We already answered that question. I think she popped that in the chat and in the Q&A. Dennis asks, who can estimate my mortgage maximum? Do I need to provide a kind of maximum amount confirmation document before sending an offer? Cesar?
Yeah, the person who can estimate your mortgage maximum is a mortgage advisor.
Do you know any good ones?
So my colleague Robin is buying a home, and this is what I ask him on a daily basis, if he already knows it. But there was a bit of a side note. It depends a bit on the selling agent. So Kimo mentioned what he notices is if you have two similar offers, if a selling agent has two similar offers, one offer is with a buying agent and the other is without, then what could happen is, just so the selling agent has more security, they could ask you to, or they could ask the buyer's mortgage advisor to set up a calculation and send it to the selling agent. This sometimes happens, so that the selling agent has a bit of security that the deal will go through. Because there's nothing worse than for a selling agent that the purchase doesn't go through because somebody couldn't get their finances in order. So I hope that answers that question.
I hope so too. Diana asks, is it true that the transfer tax will jump to 8% in 2021 if you're buying as an investment, so to rent out? Yes, it does.
Yep.
I think the government has found out that property should be bought to live in, and they want to make it a little bit more attractive for home buyers or starters to actually enter the market, and less attractive for investors to purchase property. Again, this is linked to the actual transfer date of the property. So if you're still able to transfer an investment property before the end of coming year, then that is still an option.
Yep.
I hope that answers your question, Diana. Then we have a question from Linda. I was told that once we cancel the sales contract due to unable to secure financing, the makelars don't want to do business with you again, that they remember you. How can we avoid this kind of trouble? It's a good question, Linda. So the way to avoid it is by making sure you have the right advisors on your side. So one is make sure you have a mortgage advisor that can actually support you with the process, and make sure that you don't go nuts when it comes to actually offering on a property. Make sure you link it to the market value of a property. If you do that, then you'll at least get a valuation that is close to the actual purchase price, or the purchase price that you've actually offered. And then those are the two things that will definitely set you up for success. Of course, there's other criteria that will help you secure your mortgage, and that just be completely transparent with your mortgage advisor, because they'll actually be able to help you and also give you an indication of whether it's likely that you're going to get a mortgage or not. I don't, judging off your name, I don't know, it sounds Dutch or maybe South African, but I think that there's several countries which makes it a little bit more difficult to acquire a mortgage, but Cesar will be able to tell you all about that. Just make sure you know what you're doing when you actually submit that offer, and you don't come in the situation where your mortgage is not approved and you have to pull out. Even if that happens, sometimes it's bad luck. Sometimes that's the way the world works, right? And then how often do you submit an offer with the same real estate agent? I saw that you live in Zoetermeer, so it might, or you're looking for a property in Zoetermeer, it might happen a little more often there. But I think that if you're also transparent towards the selling party and you inform them, hey, we did our research, we did due diligence, we try to make sure to cover all our tracks, then most of the time they'll be forgiving when it comes to that. It's unfortunate that's sometimes the way the world works, but it shouldn't haunt you or anything like that. Hopefully that answers your question. Gundus is asking, why do we really need a mortgage advisor? I think we answered that question already a little bit. And do you want want to say anything specific, Cesar?
Yeah. So so you would compare it, I think, in this scenario to a bank. So going to a bank versus using a mortgage specialist. The biggest difference, I know you mentioned that already, Kimo, is choosing between one or two products versus, so we offer more than 40 products. But what's also good to know, so I mentioned before, we're a mortgage brokerage firm, but we're also a mortgage advisory firm. So what does that mean? What does that entail? We will not only advise you on mortgage rates, the right bank that has a match with your wishes, your future goals, but we will also look into, so what happens if you would pass away? What does that mean from a financial perspective if you have a partner? What does that mean from a legal perspective? Who will inherit your property? Who will inherit your debts? We also look into what happens if you lose your job, what happens if you get ill, cannot work anymore, or can only work part-time. What does your retirement look like? What do you want it to look like? So our approach is more broad than what you will get at a bank.
Yeah.
So I hope that answers the question. Yeah.
And this also links to Linda's follow-up question. So what she said, because she asked what happens if your mortgage falls through, then agents will remember you. And then she says, okay, hey, but I'm American, so sorry for thinking that you're either Dutch or South African. You have a very Dutch name. Maybe there's some heritage there. Apologies for that. But she's saying that I'm American, my husband is Dutch. We had our financing not approved and we lost the property. So I don't know if you were in touch with a mortgage advisor or a mortgage broker, but technically they should be able to give you a sense of security there. So they should be able to tell you, okay, this is going to be a challenge, or this is going to be easy. It's going to be a breeze, or this is going to be a rock climbing. So my first suggestion would just be talk to Cesar or talk to Robin and share your situation, right? Then there's a few questions that are linked to submitting an offer but not getting your mortgage approved. What happens if you don't get it approved and it's within the cool-off period? So what is good for you guys to know is that until the cool-off period ends, you can pull out of the deal without giving any reason, right? And that's on the day that it ends. That's the last time you can actually pull out. You don't have to give a specific reason. Afterwards, if you have your offer accepted, you sign the bridge contract and the cool-off period expires, then you're locked in. You're locked into the purchase. If you have made an agreement that says, if I don't get my mortgage approved, I can still pull out, that should be in the bridge contract, and then you can still pull out after the cool-off period ends. If you don't have that in, then you're locked in. So please be careful what you put in the offer and read the purchase contract carefully. Make sure that the criteria and the conditions that you've requested are in. I hope that answers both your questions. Min, Kyung and anonymous A10D. Cesar, I want to know, says anonymous attendee, or I would like to know about the amount of the loan that I can get from the bank. Is there a limitation based on salary? For example, if the price of the house is 375,000 euros, how much should be my monthly salary? I also have 40K in my account if the salary is not enough. And I would like to know if this is savings can help me to get enough loan from the bank to buy a house. There are several questions in there.
Yeah. Savings will not ensure that to increase the mortgage. So maybe that's a short and quick answer to that. From the top of my head, I don't know what the income should be to get a mortgage of 375. So what we do when calculating what the eligibility for a mortgage is we look at the gross income that you have, and then we look at how much you can spend on housing. So how much of that gross salary, gross income you can spend on housing, and then we recalculate it back to a mortgage sum. But that mortgage sum, so one of the questions was if you could get a duration of 30 years, but you could imagine, so if you can spend 1,500 on a mortgage, you could get a 30-year duration versus a duration of 25 years, then you could imagine that if you choose the 25 years duration, that the mortgage amount is lower because you need to repay your mortgage faster. So it all boils down to what are the variables and which variables will we play with. So I hope that answers the question. What you could do, as mentioned before, you could contact us. We can set up a calculation for you. It's no strings attached and free of charge.
Hope I answered your question, anonymous attendee. And then Common asks, does the NHG limit refer to the value of the apartment or the mortgage taken out? There's a little bit more to that question, but technically it links to the value of the property. Let's say there's a property that is 310,000 euros on the market. You buy it for 315, and turns out that the value is even a little bit more. So you got a great deal there, right? So the value is 320. You will be able to get a NHG. Even if you pay 50% of that property with your own cash, you'd still be able to apply for the NHG. So it has to be linked to the actual value of the property, and it's not linked to, oh, sorry, yeah?
I hope I understood correct, Timo. So if you put down on a mortgage, it does not mean that you could get a mortgage with cover from NHG. So if you buy a property for, let's say, 400, you put down 100, then you can still
no. What I'm saying is that if you buy a property for that is valued at anywhere up to 325, you could still consider putting up some of that cash yourself, but the value of the property can't be more than 325 for you to actually apply for an NHG. So let's say you buy a property for 400,000 euros and you put up 75K yourself, but the value of the property is above 325, then you won't be able to get the NHG.
Correct. It's the purchase price. It's a purchase price.
It's a purchase price. Sorry, it's a purchase price. Yeah. Hope to answer your question, Kalman. Sorry. Is there a preferred age range to apply for mortgage loan?
No. It's what we do. We don't look at only your current situation, but we also try to look into what your future situation is or might be. So I'll give you the example with the 30% ruling. Currently, the net income is higher than after the duration of the 30% ruling. So we will look into how will that, what will the impact be on your income, and will your mortgage, for example, still be affordable? So we make sure you're safe. Yeah.
Perfect. I am going to go over the second part of Coleman's question, because he said, if I pay for the property and I pay in total 340,000 euros, but I only need a mortgage of 290 because I have some of my own cash, will I still be able to apply for an HG? The answer is no, because the purchase price is above 325.
Yep.
Then Sinem asks, if I'm signing the contract to buy a property this year, will I still be eligible for a tax exemption starting January 2021?
Yeah, handover date is leading.
Yeah, so the handover date is leading. This means that you actually become the owner on that date. If you sign to purchase, then still you would need the mortgage to be approved and to actually have the transfer date. So it's not when you sign the purchase contract, but when you actually become the owner on the transfer date. Then, are the mortgage interests usually fixed or flexible, asks Diana?
So you can fix your rate anything between 1 year fixed and 30 years fixed. A lot of people choose either 5 or 10, simply because so the longer you fix your rate, the higher the interest rate is, because you're buying security. If you're not planning on settling in the Netherlands, why would you pay this higher interest rate? So a lot of clients either choose 5 years because that's the duration of their 30% facility, or the 10 years rate to give them a bit more time.
Cool. Then anonymous attendee asks, if you decide to sell a house before the mortgage is paid off, what's the process for that? I think, does it have any implications on the bank, the agreement you have with the bank or your mortgage?
No, the mortgage just wants, the bank just wants to see the outstanding debt. You don't have to pay any additional charges, any additional penalties, any additional interest payments, because the bank believes 9 out of 10 times, if a client sells their home, they are going to buy a new home. So they want you to leave the bank when you sell the property with a good feeling, so that you will return to them with a new mortgage. So they don't let you pay any additional charges. However, selling, so an agent is going to charge you to put the property on the market and for the actual deal. And besides that, the notary will charge a small fee for the administration.
Then Chandra's asking, what are the advantages of buying an apartment over an individual house or a row house? That's a good question. It's actually a first, Chandra. So the advantages of buying an apartment is, there's a few pros and cons. One of the things is that it's most likely part of a own association, which means, so let's look at a flat building, right? So an apartment flat. So there's 20 apartments in that building, and they're all part of something called an owner association. What is the responsibility of that owner association? It's maintaining the quality of the building, of the public areas, taking out insurance. So the costs for maintaining all of that will be shared by 20 owners in that building. If you buy a row house or an individual house, then you'll most likely not be part of an association. So you will have all the responsibility of the maintenance of that house. The advantages of buying a row house or a freestanding house is you might not have that many neighbors. You don't have anyone living above you or below you. The other thing is that you'll probably have a little garden out front and out back, and you'll maybe have multiple stories. And there's plenty of advantages there. Definitely from a maintenance point of view, an apartment would be more advantageous. Square meters and environment. If you're looking for a row house or a freestanding house in one of the cities, then you'll probably pay more per square meter versus an apartment. If you buy somewhere outside the the city or in more rural areas, you'll have more likelihood of actually finding a row house or a freestanding house. That's what I can say off the top of my head. Does it have any implications on the mortgage, Cesar?
No, it's the biggest difference between applying or mortgage application for an apartment is the bank will look into how financially healthy the owners association is. They will look into if there's a maintenance plan. They will look into the building insurance policy. So what has been covered, what has not been covered. So those are the biggest differences from a lending perspective. Yeah.
Cool. Javier asks, I've heard that the government might stop giving tax rebates on mortgages. Do you know anything about this? Thanks.
Yeah, so this has been going on since at least 20 years. None of the sitting governments wants to burn their hands on this topic. So yes, I've heard it before. I've heard it every year. It's not going to happen next year. Yeah, that's all I can tell you about it.
Rob asks, what range are mortgage interest rates currently within?
So a 1 year fixed rate would be, so this is, you have, that's good to tell. You have interest rates for mortgages with NHG, so the National Mortgage Guarantee that we discussed before, and you have interest rates for mortgages without NHG. And I'm going to give you the answer, or I'm going to give you examples of interest rates for financing 100% of the value of the property, because if you pay down on the value of the property, so for example, you get a mortgage for 90% of the value of the property, then the bank will give you a discount. But I don't know everything from the top of my head because we work with 28 lenders. But so a 1 year fixed rate is around 1.25. And a 30 years fixed rate is around 2.7, 2.8. So yeah, I hope that answers the question. If you look at 1 year's fixed up until 10 years fixed, it's more or less the same, because so the lowest 10 years fixed rate is currently 1.58. So there's not a huge difference between 1.25 and 1.58. And you're buying off 9 years of extra security. So a lot of people choose either 5 or 10, as mentioned before. And the difference between 5 and 10 is small, maximum of 0.10.
Okay. Thank you. Spiros is asking, if rents are generally cheaper than mortgages for the same property, does it make sense to rent the place if you're not planning of using it in the future? So please be aware that when you buy a property that you're going to rent out, you'll incur higher transfer tax, like we answered before. So that'll be 8% starting 2021. Also, I'm not sure if Cesar used the gross or the net amount in mortgage that you would pay, but if you have a property that you rent out, you're not eligible for the tax rebates from the government. Also, you would need permission from the bank, and if that's the case, then interest rates will increase. So I think the calculation that Cesar used is based on a property that you would buy to live in versus a property you would rent to live in, not a property that you would buy to rent out. So please be mindful of that. If you can find a good deal with a buy-to-let mortgage, then yes, it could pay off. But yeah, it's going to be less attractive since you'll have to pay more transfer tax coming year. Let's see.
I like Chandra's question.
Chandra's question, is the transfer and other documents available in both Dutch and English, that one?
Yeah.
Yeah, it's a good question. So what you'll find is that there's a difference. So let's first start with the bridge contract. So the bridge contract most of the time will be in Dutch, except for when you do it in some of the major cities and the notaries are drafting it, then it will be also in English, but you'll sign it in Dutch. That's good to know. Sometimes you'll get a translation from the selling party, but it's just a kind of like a template translation. The deed of transfer and the deed of mortgage are both in Dutch. So what's going to happen is you'll need an interpreter to be present when you sign both. So that's most of the time the notary that arranges that. But you'll sign in Dutch, they'll talk to you in English. Yeah, I hope that answers your question a little bit. Are there any more? Miguel, the case scenario where I leave the Netherlands having a mortgage, is it viable to let your house rented to a third person better than selling or getting rid of the mortgage? That's the top question.
Financial position. Aware of is to get an update every once in a while, so you know that the products that you have and the goals that you try to achieve are matched. So I hope that gives an idea. So there's no golden rule that helps you.
Calculate that. Then Diana is asking in regards to the mortgage. I heard that the bank would consider a maximum of 24% of your growth income to pay the mortgage. Is that correct?
That depends on how much you earn. So I mentioned before, we look at your gross income. Based on your gross income, we use, for example, 24%. That really depends on how much you earn, and so we have fixed tables to look up how much we can use. So if the bank has told you 24%, it's also based on the interest rate they used. It's also based on the duration. So there's a lot going on, but there is no. So we can use a different calculation where you could borrow slightly more or less, and it all depends on the variables such as interest rates, duration, those types of details.
Okay.
Yeah, and maybe good to add, sorry. So some banks or some buyers have a bonus. Some banks will not use that bonus. Others will, because it depends on the policy of the bank, how to deal with, for example, a bonus income.
Perfect, thank you. Yaroslav Palomar is asking what the process for house viewing, how fast do I have to make a bid? Can I get some house documents before the bid, and should I send any of my documents before the viewing? Is there any common rules to making a bid as soon as possible or after 1 week, for example, also okay? So one of the things I would always recommend is ask the selling agent or the selling party what the process is going to be like. Some say we have a deadline before which all the interested buyers have to submit their offer. Some say there's nothing, so maybe sometimes first come, first serve, or we'll look at the first offer. That doesn't mean you'll actually accept it. But please get information from the selling party before you define your strategy. About requesting documents, I would always request documents. Doesn't matter how fast a deadline is, always request the documents. Most of the time, the selling agent will be able to send them to you the same day, and that allows you to review them a little bit. And when it comes to sending any of your documents, I think you're referring to a mortgage advisor. I would touch base with one before you start viewing or before you submit an offer, and share as much as possible with them, so they'll actually ready to get the process started once once your offer is accepted. In terms of sending documents to the seller, you wouldn't have to send any documents to the seller. You just submit your offer. Sometimes it helps if you share a little bit of a story, personal story. Sometimes it helps if you share a document or a letter from the mortgage advisor stating that they're quite confident about you securing your mortgage. So that's what you can do, but make sure you know what the process is and what the timeline is for that specific property from that specific seller. Then Common is asking, do most banks allow yearly extra payments along your monthly payments? ABN AMRO has a 30K yearly as the limit, I think, for example.
With every bank, you can repay 10% of the original principal, so 10% of the original mortgage debt without additional charges or without a penalty. I mentioned earlier, we make use of 28 lenders with over 40 mortgage products. Some products have, for example, 15% early repayment without charges. Some have 20%. So there's a lot to choose from, and a lot is available. If that's something that's important to you, then we could look into that when choosing the right bank for you. So I hope that, so it's not based on a figure, but it's based on a percentage of the original mortgage amount.
Perfect, thank you. Then Rob is asking, so further on the mortgage rate question, is it possible to get a mortgage on a property that was recently purchased with cash? For example, use the leverage and certainty of a cash purchase to achieve the best purchase price, but then take a mortgage out to recover the cash position.
Yes, that's possible. As long as there's income. If there's income, you could get a mortgage based on your income. It could, I don't know how fast. So Rob is mentioning recently purchased. I don't know how recently is, but it could have some tax implications, but that's something to discuss in a personal meeting, maybe.
Cool, thank you. Sinem is asking if the buying consultant tax costs are tax deductible. Unfortunately not. So I hope when COVID is blown over, then we'll be able to ask the minister to make it tax deductible, but I don't foresee that happening anytime soon. So unfortunately not. Then anonymous attendee, does it make sense to still ask for a technical inspection for a new build that has had no tenants or people living in it before? Sometimes it can be a good idea if you're uncertain about the level of the construction or the building finish. Most of the time you won't be able to, because you'll buy the property and then they still need to finish the building. Upon the final inspection, you could ask somebody to actually come with you that has a good eye for how the building is finished. That's definitely worth it. I think that you can request that. I don't know what the rates are for inspecting a new build. I think they might be a little bit lower than the rates for expecting an old build, but that's something you'd have to look into. I have not done that before, honestly.
To be fair,
Rob,
I've never seen that. I know you can do it, but I've never seen that.
No.
Mm-hmm.
Rob is asking what are good resources to find previous sales data. We have something called the land registry. Thanks to Napoleon, I think he came in to the country and said, how are we going to tax everyone if we don't know who owns what? Thank you for that. I'm not sure if there's any French here, but well, it's a good system to at least find out about who sold what, who owns what. The land registry, the Dutch translation is kadaster. You can get previous sales data from the kadaster. It's a bit of a maze, but if you persist, you'll be able to find it. Mm-hmm. Thanks for the very informative meeting, folks. You're welcome, Phil. Yeah, so Rob asked the kadaster for €3 per property. Yeah, sometimes what you'll be able to get is you'll get I think the purchase or the sales price for for that street. You were looking for a mass database. If there was one, that it's the Cadastre. Cadastre owns that data, has that data. So any third party will actually get the data directly from Cadastre. Or you have to become a real estate agent because they will share information amongst each other. But as long as you're not, you won't have access to that data, unfortunately. Yaroslav, what percentage of houses have overestimated prices on Funda? Or usually most of the prices are quite similar to the bank estimates, or some are percentage for the bid. I don't know what the actual percentage is of properties that are on the Funda for below the market value. I think it's the majority of them. It says a little bit more about the selling party. How opportunistic are they? Most of them will not put it up for much more or more than the actual market value, because especially in this current time, people are still overbidding. So that will make it more difficult for their buyers to actually get the mortgage. So we'll see that they'll put up for a little bit less. It also impresses the selling party or the owner more if the selling agent can say, oh, look at these many people, and we had an offer that went 50K over, but actually was only about 5K over the actual value. So you'd have to look at it on a case-by-case basis. Yeah, it's difficult to say. If I would know that percentage and I would be able to share with you, it would still mean that I would urge you to look at the market value, because the actual data there doesn't tell you much unless you use it to purchase a lot of properties. But if it's a single incident, then I would just look at the market value and base your decision on that. I hope that answers your question. If we have access as a buying advisor, asks Rob, we have access to the land registry as well. We are not part of a real estate association, so we don't have access to all the data, but we have access to plenty of data. Yeah, that. Hope that answers your question. Anonymous attendee, do new build houses have different taxes? So if you buy a new build property that is like fresh from the developer, there is something that you wouldn't have to pay, the transfer tax. And there are some other costs that you wouldn't have to pay as well. But the transfer tax is probably the biggest one. There's something we call, well, we call them purchase costs. So kostenkoper is the Dutch word for it. That means that the costs related to buying a property are for the buyer. When it comes to buying a project development or a new build property, these costs will be lower. Again, transfer tax is the biggest chunk, and some mortgage costs, some notary costs will be lower. Yeah, that's the answer to that question. Are there any different taxes? No. One thing you can maybe take into account is ground lease when you buy a new build, especially in Amsterdam. You'll probably incur and find ground lease on new build properties. Which technically means that you don't own the ground that the property is built on, but you're renting it from the municipality, which is perfectly fine. But when you look at new build houses, look at that. That's probably one of the biggest differences. I hope that answers your question. Did we answer all of the questions, or are there any? There's a few maybe in chats.
Yeah, I was also going through that part. No, I think this was it.
Perfect. And we still have 29 people left. Thanks everyone for staying with us, for joining us. Let me go to the presentation because we of course can't leave you without a few of the last slides. Schedule a free intake. No strings attached. Again, we're here to help you out. If you have any questions, just click on the link. We're going to share this this presentation with you. Click on the link below. We're happy to help you out. And answer any questions that you have. And if you're looking for support, then we're also happy to assist you. Have a lovely evening. Yeah, looking forward to hearing from you guys. Take care. My name is Kima. That was Cesar. Have a lovely evening.
Thank you, everybody, for attending. And enjoy your evening.